Hello, I'm Finola Burke from RaaS, and today we're focusing on patents, trademarks and IP services group, QANTM Intellectual Property, ASX ticker QIP. Joining me to discuss the company's H1 FY24 result is CEO Craig Dower and CFO Brenton Lockhart. Welcome, Craig and Brenton, and thanks for joining me.
Hi, Finola. Nice to be here.
Thank you.
So, Craig, we'll start with you. QIP has reported its strongest ever results since listing, with a 9.2% increase in service charges revenue, a 25.7% jump in underlying EBITDA, a 43.4% lift in underlying NPAT, and you've increased the interim dividend by 75%. This has been the result of investment in people and systems. Does this set a new baseline for the group?
It's a good question. Interestingly, as we were loading our material onto the ASX website and we had the 75% increase in dividend, there must be some background AI app on the ASX website, and it prompted Heidi Delaney, who's our governance manager, and said, "Are you sure that this is not a mistake?" So that was kind of nice. We haven't had that experience before. This result is really, even though it's sort of happened in this last half, and they're a great set of numbers, and we're really pleased about them. It's really the result of 2 years of work and focus on a bunch of things, including improving our financial disciplines. If you go back to sort of COVID, we really focused for that 2-year window, especially given our centre of gravity was largely Melbourne, Victoria, that had a lot of lockdowns. We focused heavily during COVID on looking after our people and building a flexible workforce because we didn't have any of that. And so really since then, we've been building these foundations. And if you look at the last 4 reporting periods, we've had consistently improving margins from the sort of mid-20s upwards, and we've been saying for a little while now that our target for margins was the low 30s, so that's EBITDA as a percentage of service charges. And in the last half, we've gone above 30%, and we expect to continue to improve. So in that sense, margins in the low 30s is a new baseline for the group, we hope to continue to improve from there.
And Craig, what was the thinking behind the increasing the dividend payout ratio, and should investors expect that payout rate to remain at these levels?
Yeah, our range has been 70 to 90% of NPATA right back since listing in September 2016. Sometimes we've paid at the higher end of that range, sometimes the lower. So this is right at the midpoint at 80%. But I think it's the single biggest dividend payment that we've made for a half year at 4.9 cents. And that's really not really the ratio. The ratio is part of it, but it's based upon the stronger NPATA result. So we chose the midpoint because we think that that's balanced given various capital requirements. At present, we've paid down quite a bit of debt, which Brenton can talk to. And so I don't see any pressures in the near term to change that payout ratio range. We've had that in place pretty much since listing, as I said, but that's really a matter for the board to determine.
And Brenton, the increase in service charges revenue was delivered despite a decline in market share in patents in the half, although trademark share looked like it was up. Can you give us a sense of where the gains were made?
Yeah, well, there's a couple of things. The first thing we always remind people of is with filings that we can need to look over the trajectory over about a 12 to 18 month period and look at the trend. So even though our filing numbers were down, the trend is still up. So even though it's 14.4%, if we look at our January numbers on filings, for instance, we're up 27%. So we're still looking at the trend that's still intact, which is still pointing up. And they've dropped a little bit. We lost some Cotters clients as part of the acquisition into FPA, but they weren't as profitable as others. And the other thing that's important is filings is the start of the life cycle effectively for a patent. So patent, it can take up to 5 years. Trademarks is more 3, bit smaller. But again, you go from filing through to examination requests, then into prosecution before you get into acceptance and that annuity stage of renewal. So what we've seen is in those different parts, whether it's examination, prosecution or acceptance, because we have come off a very high period in filings, we've got different volume growth in each of those buckets. So even though we've seen a temporary drop at the minute for the half, we've still got our volume increasing from the record filings that we've had over the past.
And Brenton, you also had a good increase in litigation revenue and obviously the trademark side, which includes Sortified. Has that been a factor as well in the growth that you've seen in service charges revenue?
Yeah, thanks, Finola. The law team had a terrific 6 months. That's the best 6 months they've had in a few years, and there's a couple of reasons for that. The caseload was very high, but we also were able to recruit a full team. So that first half, very, very strong. Will it be as strong in the second half? Well, it's going to be dependent on trials and what activity is going on, but they had very solid first half, and we think that will continue into the second. And on the trademark front, again, we were record number of trademark filings, so that continues to grow behind Sortify's platform.
And Craig, you've previously talked about Sortify holding a top 10 position in the UK. Is it retaining its market position there, and how is that market tracking currently?
Yeah, it's sort of there or thereabouts. I think they're either 9 or 11, depending on how you measure it. I think the top 2 filing firms in the UK now are 2 Chinese entities that are filing exclusively for Chinese trademarks out of mainland China and into the UK. And actually, we're seeing that phenomena, a big uptick in Chinese filings in trademarks all around the traps, including here in Australia. But they're sort of about number 9 if you net out those 2. And it's an important market. We're continuing to grow there. It's about, I think, 2 times, 3 times the Australian market in terms of overall market size and addressability. So, yeah, that's an important market. Probably it's the second largest market for us at present in Sortify outside of Australia. And then we're continuing to look at other markets that Sortify might want to operate in as well. And the key there really is to find IP offices that have an open API set that you can automatically integrate with, and therefore sort of take the pain out of that whole process so that the experience really is an online experience.
Brenton, you finished the half with a much stronger balance sheet with a 33% reduction in net debt to 21.2 million, and you have almost 27 million Aussie in an undrawn acquisition facility. Having been so stringent on the business over the last few years, have you raised the bar as well on the criteria for potential acquisitions?
Well, our criteria for acquisitions has always been really high. So we always want top-tier firms, fit in with our values and can really look after our clients. So being part of our group and not a trading off, trying to mismatch the values and culture. So we've always had really high standards when it's come to M&A, and as we've talked about, some of the conversations we're still having with people are 2 to 3 years old still. But again, we take a very methodical process to work through. It does give us a bit of flexibility with a reduced debt to look at larger acquisitions, but our criteria is largely the same outside of funding. We've still got that high standard where we want someone to come in and be a real part of our group.
And Craig, QANTM IP is now in year 4 of a 5-year technology modernisation and business simplification program. What can we expect to see in terms of implementation this year?
Yeah, a couple of threads, I suppose. We're finishing off some modernisation projects. So we've got a new document generation platform. We're just in the final stages of software platform selection around that. We're continuing to move all of our mail and messaging away from our on-premise data centres and sort of old Microsoft Outlook and Exchange into Microsoft's cloud, and getting prepared for utilising Copilot. And we've still got a few smaller production applications that are running in our own data centres, and we want to get those onto the cloud as well. So that sort of cluster of sort of completing the modernisation process, and we think that'll be done sort of maybe end of this financial year, maybe a little bit into FY25. We've started the implementation of the new finance platform, so we've chosen a vendor, and we've got workshops starting in a few weeks' time. That's a big deal for us. That's a real game changer. We're 7 years as a listed company, and we're using our IP platforms as our general ledger, and we don't have a means of systematic consolidation at the end of every month and for important parts of the year, like half year and full year. So for Brenton and his team, that's a very manual reconciliation process that involves lots of use of Excel. So the finance platform will probably take us sort of 12 to 18 months to implement, but it'll change a lot of processes across the group. And then the third and final thing is working with Sortify and a bunch of our people across the group. We've just finished the first draft of an overall AI policy and strategy framework. We're using a bunch of AI tools at present, and the strategy really is to bring the best ideas from across the group together and leverage the unique capabilities that we have within Sortify.
And Brenton, you've affirmed your guidance for FY24 and commented that January has started strongly. What visibility do you have for the remainder of the fiscal year?
Yeah, I think when we put that guidance out, we hadn't seen the January result yet, and January's been quite strong compared to what we did. So that 8 to 10% range, we reaffirm that, but our thinking at the minute is it's going to be at the higher end of that range.
Well, thank you, Craig and Brenton, for joining me today to discuss Quantum Intellectual Property's interim results. I'm looking forward to catching up with you over the course of the year to check on the company's progress.